Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 9th, 2022. Before we get started, this video is for informational purposes only. These are not recommendation to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, and also like and subscribe. As always, if you guys haven't yet, please do right down below. It really does help me out. I appreciate it. Keeps me doing these videos, right? I like doing these videos. This is my homework and I like sharing it with you guys, but I do, appreciate the likes, subscribes down below. So thank you very much. Let's get started. So SPX. So we have this gigantic potential topping pattern, right? But now on this right shoulder over here, maybe an inverse head and shoulder, possibly building out, neckline being up here. So I don't know the answer to that question. I can tell you right now, the odds are favoring, more downside move. And I'm going to just extend this out a little bit because, the downside looks like it's pretty strong. Last week, it was down 1.27%. Pretty big down for an index downside. And see these three bars right here? There was no push to try to move higher yet. I think that's very, very dangerous. At first it was kind of like bull flaggish, and then, was it Wednesday? I guess it was a 1% drop in the market. That was a big deal. And gap down and so on and so forth. And I guess this bar was the telltale. I think it was Tuesday. Try to push higher, failed, and boom, to the downside. Pretty rough looking candles right there. So that's on the SPX, the weighted index. So let's go to the RSP, the unweighted. Now, the unweighted looked a little better. If you notice, it was up on Friday, where the SPX was down on Friday. So under the surface, maybe a little bit of buying in there, right? And again, this one looks better. It's above the 23-day, whereas the SPX, just going back, I guess that one's above the 23-day also. Anyway, this one looks a little bit better, but still at best in a range, and not looking like fantastic though. The levels are clear. I think this could come back and retest potentially 146. I mean, that's a possibility, right? Or maybe it makes a higher low, right? Maybe, stops someplace short of, comes out to like 152-ish. But right now the momentum is to the downside. So definitely be careful there. Looking at the Qs, and the Qs are still much weaker than SPX. And just looking at this, a whole bunch of levels on there. This is the VWAP from COVID lows. And so it came up to this area, failed miserably, and sliced right through this area. So this is, it was important back here, much less important over here. Very likely we hit, we test 340-ish, someplace in here. And then we'll see what happens, right? So for this VWAP was important, maybe we come back and test the VWAP again, who knows? But again, momentum to that downside looking pretty weak. Now let's compare that to the equal weight. And yep, that looks pretty ugly too. Equal weight, I've been talking about this kind of head and shoulders-ish top. Not a perfect neckline by no means. I know you probably draw a diagonal neckline, and again, somebody's gonna be like, you can't do that. But I do whatever I want to. Something like that would be important. Again, this area eventually becomes the most important area right here. It's got to hold above 68. Does it make it all the way down there? I don't know. Maybe not. But this is a pretty nasty looking head and shoulders top. This one confirmed. That was, obviously for sure head and shoulders top. Very textbook looking. Then you had the, retest, move down. Now it's kind of chopping sideways. If it does break this, that would be really, really bad. On the equal weights, that means that the carnage is everywhere, especially in the technology and growth sectors. I don't know if it's going to do that or not, but I can tell you that the momentum, the move right now is to the downside. So just to be very careful there. Mid caps, MDY, they've been holding up better than most, tighter range at least, but still, testing the bottom of that range. Potentially could even get all the way down here to 455. So maybe a little bit better. You do have the negative, the bearish cross right there. But again, maybe holding up a little bit better than the other indexes. IWM. This one I drew in maybe an ABC. I'm not ABC, I'm sorry. A 5-wave pattern to the downside. I don't know if that's gonna hit or not, but it's trying. And it was really nasty last week, down 4.67% in a week. Huge down week for growth. And looking at the Russell 2000 as an area of maybe risk appetite as well as an important index, that says there is no risk appetite, right? So watch this area right here. Do I know if 171, 172 is going to hit? Yeah, no idea, right? But this is an important area. This is a part that has to hold if it makes it down there. And again, question mark. Don't know if it's going to, but this is the area that has to hold. Like, this area doesn't hold, like, things are much, much worse than we ever thought. So how much further is this, right? That's the next question. 14%, 13%, somewhere like that. If it makes it all the way down there, that's a pretty good number right there, right? In IWM, pretty good number. So just be aware of that this is looking more like more downsides coming, and potentially up to 15% on the IWM downside. At IWO, small cap growth names, get underneath, never made above the VWAP from COVID. Again, it has a very similar look to IWM, but it's closer to the potential bounce, right? So it's only about 9-10% from my green area. So that one may bottom first. When we may see this one show some relative strength first, because it's leading to the downside, it may rebound first. Don't know if it's going to, but that's a possibility. But right now, I think there's definitely, in this particular index, IWO, again, it's a risk appetite index. I definitely think there's more downside possible, probable, and maybe up to 10%. Again, 10% is going to feel like somebody stabbing you in the gut. It's terrible. All right, let's look at some sectors. XLF, again, lower high, lower high, lower high. So I can't say it's even holding its own. It's not participating, not a positive sign. SMH, we talked about how this was getting wide and loose up here. It was a top, and now it is breaking down. Again, we can potentially call this a head and shoulders. It's now below this neckline-ish area. Very possible 221 gets tested. That would be from here, that 10% or so lower. It's in line with what we're seeing in IWO, and even IWM, it's in the same ballpark. Again, I would like to see semiconductors rebound fast, and that would give me a lot of confidence in growth, which I'm always looking for growth, right? Because that's going to move fast. Lumber, no signal. It's still in this choppy range. So we're just gonna move past that. VIX, only a 21, which is kind of funny, right? I'm gonna switch to a line chart here and take off my moving averages. Yeah, it's only 21, which actually is not terrible. So that's kind of interesting. So VIX is not saying that the world is gonna end tomorrow. I like that. Bond yields. All right, so this week we did have a spike in bond yield, but still it's within an acceptable range at 1.5. It made like a lower, you kind of undercut this area right there, rallied back up. I still think 1.52, and now it could go up to 1.55 without making a higher high. So that's what we want to make sure 1.55 does not get taken out. But But overall, I mean, yeah, it's spiked up, and there's been, it could go up even more, but I'm not too concerned about it yet. Now, straight up like this, or even like this, would worry me. But we don't see that quite yet. So let's take it as what it is. And that is, yes, they're starting to get a little frisky, but nothing crazy. The call ratio, people are complacent still, right? 1 foot in the door, 1 foot out of the door, nothing too crazy here. I'm looking for, listen, if we get that 10% quickly and we get a spike like this, that would be amazing as prices coming into potential support, and we get excess bearishness. That would be great. We don't see that yet, but it's definitely something I'm watching for, right? That's going to be a big deal if we could get that. Looking at the value line geometric index, measure of breadth in the market. Breadth was rebounding very nicely, and it obviously took a hit this week. Not terrible yet. This is the area that you got that has to hold. You see it retested back here in March, and held, spiked nice. And now we'll see if it retests it again and holds again, right? It's 595, 590 to 600 area has to hold. So far, breadth is hanging in there, right? According to the value line geometric. Another breadth study is percent of stocks above the 50-day. This was really nice to see. This thrust right there. It got me much more bullish in general. And now it's coming back down a little bit. So, we'll see how far it goes. If it makes a higher low or what happens here, but it's deteriorating some, but not like wholesale deterioration yet, or at least like this. We want to avoid things that look like this, and that doesn't look like this at all. So breadth kind of hanging in there. That speaks to rotation, right? So you have some stocks that are huge losers, right? On the growth sector. Then you have some stocks that are huge winners, right? Healthcare this week was huge winner. Staples, big winners. What else? Oil and gas names, fertilizer names, winners. So that rotation, that's what this talk speaks to, right? Some stocks are going up, some stocks are going down. Looking at gold, this kind of ran up too fast, came back. Now it's kind of consolidating. Do I know which way it's going to go? Nope. And looking at this as a potential, indicator that could be a bull flag potentially. I'll take out this line because it's not really relevant anymore. And potential bull flag going on right in here. We'll see if it is and it breaks higher. That would be a negative in general for the stock market because gold is considered a safe haven. Don't know if I agree with that or not, but that's what it's considered. So we'll take it as what the market thinks it is. And if this builds out and breaks out, that would be obviously a big deal and a risk off indicator. It's a big pattern here. We're talking about 11, 12 year pattern. So it's a big pattern. All right. And let's look at Bitcoin. Coinbase chart. Go back to a daily. Go back to bars because I like bars on this. And so, this VWAP, first off, I thought this was going to be a bull flag. It wasn't. This VWAP from the highs, okay, that one is still, we'll call it flat to declining again. Price below it, that's a big deal. We got to see price get above this VWAP and hold, and even above 46,000. Right now, it looks like it wants to roll over. We'll see if it makes a higher low, and that would be a positive, and go from there. But as far as risk on, risk off, it's in that risk off mode, in my opinion, over here. So let's put it all together. So the cues to do that. Right now, market is in a risk-off environment. In general, it looks like there's more room to the downside, especially on the Qs, but it's about rotation. And I think that is what, again, looking at MMFI, you see 44% are still above their 50-day, even though it's a pretty ugly look right there with the value line geometric index. again, it's not a nice look, but it's not like getting destroyed like this, at least not yet. So it's telling me that the rotation is real. It says you got to pick and choose your sectors, go with what's working, stay away with what's not. If you're trying to pick last year's leaders, you're going to lose money. That's just the way the market is right now. You gotta just pick what's going up, right? Don't pick what's going down. Don't pick what you want to go up. Pick what is going up. So that's what I have to say about that. So there's winners and there's losers right now. Market's not looking so hot in general, and I think the 10 to 15% on the index to the downside. Growth could get demolished even more. So just be careful with that. Check out my other videos later this week if you want to see what is going up. I am going to do my long view video probably later tonight, I think. I'm working today. So a long view. So if you haven't checked that out, you got to check that out. It's really good, I think. I'm biased though. It takes ETFs on weekly time frames and looks for relative strength. It's great for the person that works full time, that can't watch every tick in the market. It's great for people that can watch every tick but wants to know what sectors are really outperforming. So check that out if you haven't. I think it's really worthwhile. And then tomorrow, if you want to get more granular, my stocks to watch video, I'm going to take the best of the best. So look at all the sectors that I looked at, look at my scans, and pick out what is actually going up, where is their strength, and present those for tomorrow. But tonight, the long view, I think. So check that out, of course. And you can always find me on Twitter. That's where I post a lot of information at AlphaCharts365. I thank you all for watching. Hope you all have a great week. Take care. Bye-bye.